I'm Andrew Goddard, and this is the weekly Volatility Roundup from CMC Markets Connect. The Bank of Japan's modest tweak to monetary policy last week resulted in some outsized movements for the yen against a range of currencies. Whilst the BOJ had prepped the market with a dovish rhetoric, noting that more still needed to be done in ensuring inflation was sustainable before thinking about easing its ultra-lax stance, the loosening of its yield curve control was widely interpreted as having a hawkish undertone. However, for the most part, yen gains were short-lived, exaggerating recent price action. 1 week vol on dollar yen came in at 14.99% against 9.41% for 3 months, whilst activity for euro yen stood at 14.56% on the week and 8.84% over 3 months. That threat of more hawkish action from the BOJ reverberated into stocks as well, although, as with the price actions seen by the yen, reversions followed ahead of the weekend break. The Nikkei 225 ended the week only fractionally higher, but it stood out as one of the most active equity indices. 1 week vol printed 20.34% against 17.58% for 3 months. Grains remain active in the wake of supply disruption, with Black Sea exports from Ukraine having been suspended. However, broad-based momentum has been downward, with wheat prices finishing the week close to levels seen when the blockade came into effect mid-month. The IMF cautioned that the closure could add 15% to underlying prices, but the prospect of land-based routes via the EU being used instead, expectations of a bigger-than-forecast US wheat crop, and reports that Argentine growing fields are in great condition are all factors serving to keep prices in check. Wheat traded in a range of more than 10%, with weekly volatility standing at 57% versus 46.07% for 3 months, whilst corn printed 43.8% on the week and 39.87% for 3 months.